OK, so how is all this market turmoil affecting the average person in the street? Joining us now to discuss this is McGrath. He is the editorial director of What Investment? That is a financial magazine for consumers, people like you and I. Going to try and make a little bit of sense of this, try and cut out the jargon if we can, Joe.
Sure.
I mean, we keep talking about the markets going up and down. We're talking about short selling, confidence in the markets. On a day-to-day level, the fact the markets are going up and down like this, how does it actually affect the person, walking down the street?
I think that the message is very clear, and that is that people who have a long-term investment, which may be invested in the stock market, should hang on to it, because selling out now they could actually lose out quite a bit. That may be through a pension fund, it may be through their own investment portfolio, and I think it's important to remember as well that if you have a straight savings account at a bank or a building society, you're unlikely to be affected by this at all.
Exactly. I mean, it's the people who've got pensions and the people who have got money tied up in the stock markets, whether it's through their pensions or through savings. They're the people that are really being affected and seeing their money change really on a weekly basis. If you haven't got any of those, it's really about, isn't it more about inflation and just how much your goods cost?
That's right, but inflation is an important thing to consider as well, because if you do have all of your investments in cash, that does mean that in real terms inflation can actually erode how much money you have to buy goods with day to day. At the moment it's obviously quite important to realise that savings accounts, whether they're instant access or fixed term, are still paying quite low rates, and inflation can erode that quite seriously.
We're talking, and you're an expert obviously here in the UK, we're talking about the UK mainly here, but is that kind of reflected across Europe as well? I mean, presumably every person is being affected in a similar way, because Europe is suffering in the same way, isn't it?
Yeah, that's absolutely right. I think one thing is it's key to say as well is that looking at the economic data, looking at the UK versus the US, for instance, obviously we've seen the S&P downgrade at the end of last weekend. I think it's important to remember that countries are going about dealing with this problem in a very different way, and the UK and Germany, for instance, have opted to actually pay down this debt very quickly, whereas the US have opted to do something quite different, which is to put that pain, if you like, at the end of a sort of 18-month period. So you're going to look at country statistics side by side, and they may not look like the trends are following suit, if that makes sense.
If we talk about people who do have pensions and they do have investments that rely on what's happening in the stock markets, given that we see all these headlines about roller coaster turmoil, it's everything dropping, etc., etc., should people actually be worried and be panicking about this, or should they be thinking in the long term and actually be being advised by people like yourself, actually just stay calm? Eventually this will sort itself out. It might take a couple of years, but if you're not planning on accessing that money, does it really matter? No,
that's absolutely right. The message very much is stay calm. I was speaking to a fund manager at Schroders today who was telling me that they've got an investment horizon of 5 to 7 years, and they're buying into some shares at the moment which they don't look too healthy to look at today, but actually in 2 or 3 years' time they're hopeful that they're going to start to pick up, and actually the returns could be very good, because at the moment analysts, economists and fund managers are all in broad agreement that there are some good bargains to be had out there.
Oh, it's interesting, isn't it? Can you understand why ordinary people, first of all, are panicked, and secondly, they feel almost like that their futures are out of their control? They can't control all these people who are making these markets go up and down, they're seeing the stocks rise and fall. It's, they work hard, they can only control what they have and what they have in their pockets and what they earn. They actually have no control, really, and I guess that's the frightening thing for people.
Yeah, that's true. I mean, I'd say that I'd recommend that everybody takes some sort of financial advice and actually reviews their portfolio on a regular basis. But the message, as you say, is very much don't panic. And those viewers that you have in the UK should be mindful of the fact that any savings that they do have are covered should their financial institution go bankrupt or go bust, up to the value of £85,000, and investments similarly up to the value of £50,000.
Yeah, that had to be instigated, didn't it, by the government after the last couple of years when it went so disastrously wrong. Joe McGrath, I appreciate you trying to get to the bottom of all that for us. Thank you very much indeed.